Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Girish Mathrubootham, the founder who led Freshworks from its inception in 2010 to its IPO in 2021, announced he will step down as executive chairman effective December 1st this year, marking his exit from the firm. The board has appointed Roxane Austin, previously the lead independent director, since May 2021 as the new chairperson of the board.
Amazon has completed the acquisition of non-banking lender Axio for an undisclosed amount, securing access to a direct lending business in India. The deal will help Amazon expand its fintech operations here, where it has secured approvals to issue payment wallets and sell insurance policies on its online marketplace.
Co-living platform CoLive has joined hands with Bain Capital and Sattva Group to launch a pan-India co-living real estate platform with an initial commitment of $100 million. Alongside, CoLive has also raised $20 million in strategic funding led by Bain and backed by Sattva to accelerate growth, expand its footprint and strengthen its tech-enabled rental housing solutions across India's major urban centers.
Digantara has announced a partnership with the Japanese firm iSpace Inc. to create a map of the orbit around the moon to look out for space debris that could potentially harm future lunar missions. This brings together Digantara's expertise in space domain awareness and iSpace's lunar landing capabilities, which lays the foundation for sustainable lunar infrastructure, logistics, and resource utilization.
Quantum computing company Quantinuum has raised about $600 million from investors, including NVIDIA's venture capital arm, at a valuation of $10 billion. The funding also saw participation from existing shareholders, JP Morgan Chase, Mitsui, and Quantinuum's majority owner, Honeywell, among others.
Those are the headlines that we're tracking for you today on Startup Street. But in What's Brewing today, e-commerce platform City Mall has raised $47 million in its Series D funding round, which was led by Accel with participation from existing investors. Now, this money is going to be deployed to drive deeper penetration in existing regions, expand into adjacent geographies, and continue to scale distribution infrastructure. Alongside, the company also plans to strengthen its portfolio of private labels and brand partnerships. With this round, its cumulative funding has now reached $165 million. But for more on their plans ahead, joining me now is Angad Kikla, the co-founder and CEO of City Mall. Angad, thank you so much for being with us here on Startup Street. You raised $47 million in this round. Can you break down some of the top priorities as far as deployment of the capital is concerned? And, will it be more towards strengthening infrastructure or geographic expansion?
Sure. Thank you so much, Ritu, for inviting me and having me here. I'm excited to share our journey at City Mall. I think we've raised $47 million. And to answer your question, large part of it is going to get invested into replicating our lowest cost distribution supply chain infrastructure. We'll go deeper into our existing cities. So that is our first area of focus in the next 12 to 18 months. And the other area of focus for us is to continue to build a very strong portfolio of private labels and back-end brand partnerships. From an expansion point of view, we'll continue with our strategy of deepening our penetration in the existing geographies that we are in, while also growing adjacently into nearby states.
All right. Angad, when we talk about e-commerce in India, of course, there's a whole lot of commerce that is going on with giants like Amazon, Flipkart, Meesho, and then, of course, there is other sectors as well. In this $125 billion market, how are you going to defend against competition and avoid being outspent by these larger companies?
Yeah. So we are operating, Ritu, in a very different segment. While there are multiple players in e-commerce, and e-commerce in general is growing very fast. More and more people are coming and joining the e-commerce wagon from a consumer point of view. But the real white space that we've really identified, Ritu, is the fact that while there are more than 200 million consumers who are transacting on e-commerce on an annual basis, the spend of these consumers in the most important category, which is grocery, is extremely low. So the penetration of grocery in e-commerce is super low. This is largely dominated by consumer segments that are low to mid income segments, typically in tier 2, tier 3, tier 4 towns. and that's where we focus on. So we are building, the lowest price online grocery delivery platform for the most value conscious consumers. And it's a space that is complete white space right now, while the other e-commerce players are either focusing on different categories which are fashion, electronics related, or they are focusing on the more affluent part of the consumer base.
Well, Angad, you're talking about being the lowest cost distribution network, 3 times more efficient than your traditional e-commerce. Could you unpack very briefly what operational moves actually makes this kind of a claim possible?
Sure. So we have a very unique model of distribution, Ritu. What we do is that we work and partner with local micro entrepreneurs in these small areas and communities who are largely our distribution partners. These are basically people who are already doing some micro entrepreneurial job. For example, somebody who does milk delivery in the morning but does city mall delivery during the day. So we basically partner with these micro entrepreneurs in these small areas and communities, and by partnering with them, we are able to create an extremely low cost, zero fixed cost infrastructure.
Got that.
It's fully variabilized.
Angad, briefly, what about the roadmap to profitability now that you've raised $165 million? Do you see the company turning EBITDA positive in the near term?
Sure. So, Ritu, we are probably the only value grocery platform that is positive on a contribution margin level. So we basically make money on every order that we deliver to the end consumer. While we are now continuing to invest in growth, we are growing very fast. We are growing 2x year on year. And in the near term, our focus is to continue with our growth momentum while increasing our contribution margins and making more and more money at a unit level.
And we wish you the best with that, Angad. Thank you so much for your time here today. Thank you.
Thank you. Thanks, Ritu.
Well, with that, it's time to move on, and also on what's brewing. Business AI company Uniphore has acquired Orbi AI and Autonomate, 2 AI-native companies that the company claims will enhance the capabilities of Uniphore's business AI cloud. Now, both teams bring top AI research and engineering talent from DeepMind and Google, with enterprises betting their business models on AI-enabled transformation. Umesh Sachdev, the co-founder and CEO of Uniphore, joins me now to decode what these acquisitions mean, how AI is moving beyond chat to reasoning and action, and where India fits into this global race. Umesh, welcome on Startup Street. Uniphore has just announced the acquisition of Orbi AI and Autonomate. What was the strategic thinking behind these deals? If you could elaborate on how they strengthen your business AI cloud, and how soon do you see these innovations making a measurable impact for your enterprise customers?
Shruti, always great to come on your show and talk to you. We are seeing almost an exponential rise of demand from businesses, especially in US, Europe, and also emerging in Asia, for use cases around agentic AI. Our customers, about 2,000 customers that Uniphore has, several of which are Fortune 500 companies, are looking to Uniphore to drive business outcomes through our business AI cloud platform. And these customers, whether they are a big four consulting firm, a large insurance company, or a high-tech company like Hewlett Packard, they're all looking to Uniphore to deliver this innovation at a very high pace. This technology is moving fast. Every week there are new things happening. Okay. And our customers now look to us to bring this innovation at a very high pace. And in that context, Orbi AI, a company headquartered in Palo Alto, and Autonomate, which has most of its team of researchers and engineers working out of Chennai in India, add a shot in the arm to our innovation engine that we can now take back to our customers and deliver even more powerful agentic AI solutions.
Okay. All right. Umesh, like I mentioned earlier, both companies bring top talent from DeepMind and Google. How critical is this AI talent race today, and what edge does this give Uniphore in the global enterprise AI market?
Shruti, what most people who are outside the AI industry don't realize is the intersection of people who understand the deep science of AI, but also how to now apply that deep science of AI to solve real practical business problems. That intersection of talent is very, very tiny in the whole world. And there is obviously a big demand for this talent pool. Now, this talent pool is being split into 2 directions. On the one side, there are companies like xAI, OpenAI, which are investing a lot of time and money on developing super intelligence. And some of the AI talent that we know of is getting very excited with that mission, and they're joining
Sure.
those companies. The
All right,
second
Umesh.
type,
Yes, go ahead.
I was just saying, the second type of AI talent in the industry is getting very excited with fit for purpose AI companies like Unifor, which are all about business outcomes, business challenges. And in Orbi and Automate, we had two teams which were also trying to apply their research toward these business use cases. And now
Okay.
they're part of Unifor. They get a
Hmm.
much larger platform to play with.
All right. Umesh, you've also spoken about moving beyond chat and predictions to AI agents that can actually reason and act. Can you break down for us how large action models and neuro-symbolic reasoning change the game for enterprises today?
Let me bring this to life through an example. We work with one of the largest insurance companies in the world, and they have not only taken processes like customer support and marketing and agentified them, but now things that are very core to an insurance company, like underwriting or claims, are also being impacted by agents. Now, if you put yourself in their shoes, this is a very regulated industry. And what
Okay.
these customers want is agents obviously bring a lot of value,
Hmm.
automation,
Hmm.
but they want predictability. They want this agent to do the same thing over and over, not hallucinate, not come up with a new idea when they're underwriting an insurance policy or a claim.
Sure.
To control these agents, to get these agents to be more predictable, is where large action model, a model that the Orbi AI team has trained, which now becomes part of the Unifor platform,
Yes.
and this new area, which most people will tell you is a research area called neurosymbolic agents, we now already have put it in production with some of our key Fortune 500
Okay.
customers. And so
Okay.
that puts Unifor at the forefront of the business AI race.
All right, one final question, Umesh, before I let you go. You've built Unifor out of India and the Silicon Valley. How do you see India's role evolving in the AI value chain? And with global enterprises looking at sovereign and secure AI stacks, do you see India emerging as a proving ground for enterprise-scale AI deployment?
Well, Shruti, we've always said, even at a government level, that India is going to provide the talent that the world needs for AI. But at Unifor, we are just making that real. With the acquisition of Automate, which was this company and team working out of Chennai, out of the IIT Madras Research Center, at which Unifor also had our offices. We got in touch with that team. We realized that some of the work this team was doing in agentic AI was as good as any team in the whole world. And
Sure.
one of the two acquisitions now brings us about 60 engineers from Chennai. And that's a testament to the important role India will
Okay.
continue to play globally in scaling business AI.
All right, with that, it's time for me to wrap up our conversation. Umesh, many thanks for your time on Startup Street and wish you the very best going forward.
Thank you, Shruti.
All right, it's time for us to take a short break on that note. But up next, Amazon has completed its acquisition of digital lending and checkout finance platform Axio, formerly known as Capital Float. We'll get you the details and a chat with the founders on the other side.
Welcome back to Startup Street. Amazon has completed its acquisition of digital lending and checkout finance platform Axio, formerly known as Capital Float. With regulatory approval in place, the deal deepens Amazon's commitment to transparent and innovative credit solutions and building on a 6-year partnership that powered Amazon Pay Later. The venture says it is one of Amazon's largest acquisitions in India, marking a sharper play in digital lending. Axio will now operate as an independent NBFC subsidiary under Amazon's umbrella. Joining me now are Mahendra Nerurkar, the Vice President Payments at Amazon, and Sashank Risharsingha, the co-founder of Axio. Also with me is Ritu. Mahendra, let me start with you. Take us through the contours of the deal. Can you confirm if this is a $200 million all-cash acquisition? And with Axio now part of Amazon, how does this fit into your long-term digital lending strategy? And if you could also tell us how Axio's tech and risk capabilities strengthen products like Amazon Pay Later and unlock new lending solutions for Indian consumers.
Thanks, Shruti, for having Shashank and me on your show. It's a pleasure. So while we don't disclose the financial details of the deal, I just wanted to reiterate how this acquisition really plays into the strategy of Amazon and Amazon Payments to expand the financial inclusion vision in India. We've been in deep partnership with Axio over the last 6 to 7 years, building a trusted relationship with the team as well as with the founders. And we have co-created products like checkout financing through Amazon Pay Later, which customers can today use on Amazon. We have built a franchise which is about 10 million users, close to 2,200 crores in assets under management, and about 1.8% of GNPAs. And we are really proud of that portfolio. But what's really exciting for us is the ability now through this partnership to extend credit solutions to millions more of consumers and small and medium-sized businesses. So whether it is about taking the existing Amazon Pay Later checkout financing product beyond Amazon to other use cases and merchants such as quick commerce, food delivery, commute, that's very exciting. And also extending into new consumer products beyond checkout financing, such as our term loans, is the next horizon of growth for us. And then beyond consumers, it is about serving the small and medium-sized enterprises, which really helps us work on both sides of the supply and the demand side of the flywheel. So that's really what's exciting.
Got that. Well, Shashank, Axio already has about 10 million customers, or had rather. With Amazon's reach and balance sheet strength, what opportunities do you see in terms of newer products and financial inclusion?
We're very excited about the future with this acquisition and with this deal. As you know, we've been on a mission for the last decade to expand and transform access to credit in India. And I think we're just getting started, right? You asked about where we see areas of expansion. Let me share 3 with you as a start. The first is being able to deepen our proposition for our existing customers, create a seamless, unified experience for customers across Axio and Amazon, wider acceptance across merchants, and the ability to actually meet their credit needs as they evolve through the product that we're offering them today. The second big vector for us is expanding access. We do have 10 million customers, but we see this as an opportunity to deliver digital credit to the next 100 million consumers in India. And these consumers are in tier 2 and tier 3 cities where Amazon is actively expanding its reach and distribution. And we're excited for the potential of this partnership to go really deeper into the credit pyramid in India and deliver financing in a way that is responsible. And the third point is around expanding the product portfolio. We serve consumers today across Pay Later and term loans. We're equally excited about extending credit to merchants and SMEs who are the beating heart of e-commerce and GDP growth in India.
Well, Shashank, what exactly does customer-first integration mean in practice? And how are you going to balance Amazon Pay's integration with Axio's standalone brand and services as well?
Amazon brings synergies such as reach, unparalleled reach, deep technology capabilities around serving customers and designing customer interfaces, and importantly, customer relationships and trust that have been built over several years. I think with these synergies coming together, there is really an opportunity here for us to build out credit access in India, but more importantly, build it out in a way that is responsible and transparent for the customer, and with a shared ethos of complying
Sure.
with all the extant regulations.
All right, Shashank. Mahindra, coming back to you, and my final question, this is one of Amazon's largest acquisitions in India. What does it signal about the strategic importance of India's credit ecosystem in Amazon's global financial services vision?
I think it's a great question. And I feel it starts with working from the customer backward perspective. Today in India, about 1 in every 6 customers have access to unsecured credit in terms of checkout financing. And we see that as a huge unsolved or unmet need that we need to work on. And so unlocking access to credit in a responsible and scalable way is a very fundamental problem that we are focusing on and trying to solve. It's something that we've been trying to solve with Axio over the last many years. And I think what this acquisition signals is a strong commitment towards that vision of driving financial inclusion by expanding credit responsibly, by serving various different cohorts of consumers, as well as small and medium-sized businesses. And I think what it also tells you is really kind of bringing together of 2 different teams that have a very shared ethos around regulatory compliance, risk, governance, and growing credit responsibly. Because I think what's very important when it comes to growing credit in a landscape like India is really about this approach of what we call as low and grow, is to really address the different pyramids of consumer segments that exist in India in very bespoke ways, starting them small,
Sure.
letting them use credit responsibly, and then gradually grow it over a period of time. So it requires a tremendous amount of resilience, patience, and a commitment to that mission over a long period of time. And that's what excites us about Axio and the team.
Well, Mahendra and Shashank, we leave it at that. Thank you so much for your time. And on that note, we're also going to wrap up this edition of Startup Street. From Shruti and me, it's a goodbye, and thank you for watching.
What it'll do for the Indian economy as well. That's all we had time for on Global Lens tonight. Thank you for watching. Goodbye.